All right, let's talk about the advantages and disadvantages of working with venture capital versus angel investors. Hi, everyone. Thanks so much for joining me today. And thank you to Mark for the question. If you guys have not been over to Quora.com, I'll put a link right here. Quora is sort of like a search engine, but using people to answer the most common questions you have. I get a lot of questions on there about entrepreneurship and startups. That's actually how I create some of the content that I'm delivering to you. It's with the questions that I get asked. And this time, Mark asked me about the advantages and disadvantages of working with venture capital versus angel investors. Now, before we get to those advantages and disadvantages, I want to lay the foundational work and make sure that you understand the difference, because understanding the difference and how each of those categories likes to invest will change how you approach them, and more importantly, when you approach them. So first off, since Mark mentioned them first, I'll start with them and not go in alphabetical order. Venture capitalists are people, typically, some of this is going to be generalities, are investors groups or firms that manage money on behalf of high net worth individuals and invest that money into startups and other businesses. So they may be investing some of their own money, but it's kind of like having a mutual fund that invests specifically in startups, particularly high growth startups, right? So a lot of what people think about when they think of startup investors are venture capital firms, but they tend to invest in later stages of growth for a startup. For example, they tend to like companies that have existing revenue and proven business models. So they will grab a startup later in the investment cycle. Whereas an angel investor can be an individual or a group of investors that invest in startups. Sometimes angel investors will do that because they like to give back to their local community. They like to promote entrepreneurship. Maybe they were an entrepreneur and they want to promote the idea of starting a business, but also angel investors will invest in startups because it allows them to diversify their stock portfolio, right? So that's kind of the difference. Now, angel investors are going to usually invest in a startup at a little bit of a more early stage than a venture capital. So in terms of a timeline, and I call this the capital continuum. You can search for that video. In terms of a timeline, it's typically the FF&F round, which is family, founders, and friends. Then you get to maybe a seed round with an individual angel investor who would be a lead in your investment, or a group of angel investors, depending on how much money you need. And then once you've accomplished some milestones along the way in the growth of your startup, then you might be ready for venture capital, and then you might go toward an exit. That would be a typical sort of funding timeline for a startup. So angel investors, earlier stage, high net worth individuals that invest for a variety of reasons. Venture capital, a firm that is managing other people's money and investing in startups. So let's talk about the advantages and disadvantages of both. And I'm going to start with angel investors. So some advantages of working with angel investors: they can be a bit more altruistic in their investing decision. They obviously want a return on their money, so no one likes throwing money away, but angel investors typically are investing to diversify their portfolio, but also, as I said earlier, because they want to encourage entrepreneurship. So their return on their investment may not, remember some generalities today, may not be as demanding as a venture capitalist. They are more willing to invest in a startup based on an idea and less traction. Venture capitalists tend to want more traction. Angel investors may not need as many milestones to have been accomplished. I've seen angels invest in ideas purely on the idea alone, and no prototype, no early customers, no revenue, nothing. Uh, Oftentimes, an advantage to landing one angel investor is that they become what's called the lead investor. And if you need other investors, that signals to other investors that there should be some interest, right? So getting that first investor is critical. If you need multiple angel investors to fund a round, that lead is critical. So there's an advantage in getting them. A couple of disadvantages with angel investors: they may be new to startup investing. So they may be someone who's a professional and built up some high net worth and wants to diversify their investments, or wants to get involved in startup investing because they've seen it on TV and how popular it seems to be. They may have some unrealistic expectations, or a limited understanding of how the startup industry works in the first place. So that can be a disadvantage when working with an angel investor. They may be part of a syndicated group. So I know some folks around town that run a group of angel investors, and that group makes individual investment decisions within the group. However, there are groups that are what we would call syndicated groups, and that group makes an investment decision as a whole. So that can be challenging when you're trying to get them all to agree to invest in your startup. And then another disadvantage to angel investors is the amount of capital that they're going to invest is typically much smaller than venture capitalists. So you may need multiple angels. You may be having to land multiple angels. You may be having to deal with managing multiple investors inside your round. So if you're going to need significant chunks of capital, and that's not always true for every startup, I'll just take a side note here and say that that could be for something like a biotech firm that's going to be 5 to 7 years before they even get their research completed. Something like that, you may not be able to fund that with just a $250,000 angel investment round. So those are some advantages and disadvantages of angel investors. Now, let's compare that to advantages and disadvantages of venture capital. So some advantages first. Statistics show that by the time you get through that capital continuum, family, founders, and friends, you get through angel investors, and then you get a venture capitalist firm that'll basically invest large sums of money. They buy out oftentimes the angel investors. Once you get to that, statistics show, particularly later rounds. So when you talk about rounds of funding with venture capitalists, Series B, C, all that kind of stuff. Once you get to the later rounds, D and E, you're most likely going to have improved chances of a successful exit. So that's an advantage of working with venture capitalists. Venture capitalists invest in startups for a living. An angel investor may be just doing this to diversify their portfolio, their investment portfolio. Venture capitalist firms do this for a living, so they know what it takes to be successful, and they can oftentimes add value to what you're doing. And then finally, another advantage to venture capitalists is they typically invest larger dollar amounts. If you're needing in the multi-million-dollar round, typically, especially 10 million plus, that's where you might see venture capitalists come in. A couple of disadvantages of venture capitalists that we don't often see with angel investors is the due diligence process can be very lengthy and very intensive. Not all angel investors do things this way, but some don't do as much due diligence. They don't spend as much time. They base their decision based on, frankly, how they feel and some discussions with the founders and a little bit of documentation. With venture capitalists, you're going to be going through a very long due diligence process. Be prepared for that, and that can be a little bit of a disadvantage, which means it's going to take longer to get the investment. Venture capitalists oftentimes include conditions in their investment to you. So we don't see this as much with angel investors, but venture capitalists may require you to give someone in their firm a seat on your board of directors, which means they're going to have a say-so in the governance of your business. They may have other covenants that are a little bit fancy and we're not going to cover today, things like liquidation preferences, all kinds of challenges can be. Venture capitalists include typically sometimes more sophisticated covenants in the investment agreement. And so that can be a bit of a disadvantage. And then finally, compared to angel investors, venture capital firms may not spend as much time with you on your daily operations. And so how does that sound like a disadvantage? You may be thinking, I don't want them in my business. One of the advantages to an angel investor that I didn't mention is they often bring expertise to the table. And so having direct access to them on a regular basis, especially if they have expertise in your field or they've had a startup before and had a successful exit, can be an advantage. Whereas with a venture capital firm, they're not hands off. Remember, the board of directors, they may be sitting on it, may be providing some insight and some governance, but because they're professional investors, they're very busy, they may not spend as much time on your daily operations if you're looking for that input. And so that can be a disadvantage to working with venture capitalists. The big takeaway I want you to think about is with the earlier part of this video, which was the idea of the difference between the two and when they're most appropriate in the fundraising rounds. And that's something I want you to think about when you determine who you're going to seek as investors. So going straight from ideation stage of a startup, no prototype, no revenue, no customers, no nothing, and running off to seek a venture capitalist to put $10 million into your business is a mistake. That is extremely uncommon unless you are a proven startup founder. So targeting them is a bad idea. In that instance, you're going to want to target angel investors. So you need to think about these types of things when you think about who you're going to fundraise with. I hope that information helps you. Until I talk to you next time, I hope you find your voice. Have a great day.